I'd like to welcome everybody this morning to Grant Thornton's webinar on the enhanced reporting requirements that are coming at us on the 1st of January. We will have the format this morning. We're joined by Sinead McNamara, Principal Officer from the Revenue, who's a lot of experience from not only project managing the implementation of the PAYE modernisation, and now is also one of the lead roles in the new requirement for the enhanced reporting. Sinead will give us a run overview of where Revenue are at, the new rules, how it will work. We'll then have Michelle Dunn joining us and just giving us a refresher on the different types of benefits that have to be reported and when it will kick in. We're then going to have a panel discussion, and on the panel discussion we'll be joined by Sinead, who's kindly agreed to stay on for some questions, Michelle, and also Edel Murphy from our payroll team, who will go through some of the overlap that we may see with regard to the payroll reporting and the enhanced reporting, and also Fadi Bukram, who is a director in our tax technology team and who'll talk to us about the technology and the solutions that will be there in order to provide access for people to make this reporting even where they may not have expense systems that are directly linked to revenue.
Okay, just to kick off, to platform this, you know, what Sinead would have gone through obviously is the enhanced reporting requirement that is coming on stream in January 2024. And as part of that enhanced reporting requirement, there are certain items that need to be reported to Revenue on or before payment to employees. And those items are called reportable benefits. So if you want to kick on to the next slide there, Caroline, thanks. Reportable benefits currently encompass these three items. It's the small benefit exemption, it's the remote working daily allowance, and it's travel and subsistence. So within these three categories, employers will need to report any payments that are made to employees through this new enhanced reporting requirement. And next slide, Caroline, thanks. So I'm just going to go through each of the three benefits and payments and the tax exemptions that are applied to them and the conditions that you need to fulfill in order to avail of that tax exemption. So the first one is a small benefit exemption. So this is a voucher or a benefit that is provided to an employee. A benefit is a tangible asset, so it might be something like, for example, a watch. It cannot be a cash payment. So in this category, what we typically see clients provide to employees is typically a voucher. So the first and second incentive qualifies for this relief. Combined, the value can be no more than €1,000 per annum. It cannot be part of a salary sacrifice arrangement. So that might be, for example, where you have a contractual bonus. It's written and documented. You cannot exchange part of your contractual bonus for this small benefit exemption. So it's important that it doesn't form part of any salary sacrifice arrangement. If a payment is made to the employee which is greater than €1,000, that amount in full will be taxable. Now, if you have a situation, maybe you provide a voucher at the beginning of the year, that's perhaps a €500 voucher. You provide another voucher, then a second voucher, which is maybe €1,000. The second voucher will be fully taxable, but the first voucher may fall within the small benefit exemption. So it's just to make sure you're working within the parameters of the small benefit exemption and not falling foul of providing excess benefits over and above the €1,000 per annum. So next slide, please, Caroline. So the remote working daily allowance is a payment of €3.20 per day that the employer can pay the employee with respect to costs they may incur from working from home. So typically to go some way towards broadband, heating and electricity costs that the employee may incur because they're working from home. Attaching to this payment, there are certain conditions. So there must be some sort of agreement between the employer and the employee with respect to working from home. Now, Revenue guidance states that could be a written agreement or it could be a verbal agreement. Furthermore, the employee must perform substantial duties at home for substantial periods. So fundamentally what that means is that the employee effectively is conducting what they would ordinarily do in the office. They're doing that from home. So it doesn't cover a situation where somebody may just take work home in the evening, perhaps to finish a particular assignment. So where you're paying the €3.20 per day, you're really looking at an individual who is working part of their week at home instead of in the office. So where the €3.20 is paid, it doesn't attract any PAYE, USC or PRSI. If you pay anything more than that, the excess will be attributable to PAYE and should be taxed through the payroll function. Next slide, thanks Caroline. So to move on to travel and subsistence, so where an employer reimburses an employee for travel they undertake in business capacity, the employer may reimburse the employee for those costs without the application of PAYE. Now, usually this is on a vouched basis or an unvouched basis, and we'll go through each of those in the next couple of slides. Just to note, any round sum allowances that are paid by the employer to the employee, they will be subject to PAYE, USC and PRSI. So this, for example, might be a situation where the employer says, I'm going to give you €100 per week, and that's to cover, you know, the lunches maybe for being off site, parking expenses. That payment, any round sum payment where there's no provision of any sort of backup receipts or claim forms to support that payment, is a taxable item and will be subject to PAYE through the payroll function. The normal place of work underpins travel and subsistence, and it's important to determine where the employee's normal place of work will be. Now, typically this is their employer's base, but you may have a situation where an employee has more than one normal place of work. So for example, if they're contracted to work in maybe a Dublin location 1 week, and any alternative week they're probably contracted to work maybe in a Cork location, they could actually have two normal places of work, and that could be Dublin and Cork. So travel between the two may not be considered a business journey because they have two effective normal places of work. So it's important to consider that in each employee context. Just to note, within the enhanced reporting requirement, there are two items that are excluded, and Sinead will touch on this hopefully when she's back online. One is with respect to company credit cards. So if the employee is using a company credit card for payment of any work-related expenses, that is outside the scope of this new enhanced reporting requirement. Or where an employer maybe pays a supplier directly, perhaps they have an agreement with a travel company and they're paying hotel accommodation directly themselves, i.e. the employee isn't suffering the cost, the employer is suffering the cost. That again is outside the scope of this new reporting requirement. Any payments of travel and subsistence to volunteers is outside the scope of this. It's only in relation to employee or directors. So any employee or directors that are reimbursed travel and subsistence, they would be within the scope of reporting, but volunteers won't. The next slide, thanks. Within the travel and subsistence category for enhanced reporting, there are 5 subcategories. So it will be important to identify the payments being made as being one of these categories. The 5 categories are whether the payment is a vouched payment, an unvouched payment, site-based employees, any payments to them, an emergency travel payment, or an eating on site allowance. And just to take each of those now, we'll go through them. Thanks, Caroline. So vouched travel and subsistence is very much the production of a receipt by the employee to the employer and the reimbursement of that expense by the employer. So the employer incurs the cost maybe for a taxi fare, a train travel, or maybe accommodation. They provide a receipt to the employer and the employer reimburses them based on that receipt. Now, it's important also that the employee completes some sort of documentation to align the reimbursement with the need for a business trip. So typically we see an expense claim form being completed, which will detail the purpose of the journey, perhaps what client was visited and when that travel took place. There are some specific exemptions with respect to travel and subsistence for non-exec directors, and it differs depending on whether they're Irish resident non-exec directors or Irish resident non-exec directors. And there's a couple of nuances in that. So if you have anybody that is in the non-exec director space and you're reimbursing them expenses, it's worthwhile just taking a closer look at what can be paid in those situations. Also, with respect to employees that may be assigned to work in Ireland, maybe from a foreign entity, or an Irish employee being assigned to work in another foreign entity, you'll need to just consider those nuances separately, because again, there's specific exemptions available to them because they're being assigned to different jurisdictions, or they're coming into Ireland to work here for a certain period. So for example, an inbound assignee, i.e. somebody maybe coming from the UK into Ireland for a 24-month assignment, subsistence with respect to accommodation can be paid up to a 12-month period in those circumstances, but it's only in the case where the assignment is less than 24 months. So a couple of nuances with respect to people transferring between jurisdictions for assignments that you may just need to consider a little bit more closely if you're somebody in that space. And next, Caroline, please. So to move on to unvouched travel and subsistence. So this is very much where an employee doesn't provide a receipt to the employer to be reimbursed for that business travel. So what we have are prescribed civil service rates. So an employer can pay a certain rate to the individual up to those limits, those prescribed civil service rates. So that could be in the mileage category or subsistence category. So for example, in the mileage category, where you have an employee who is using their own private vehicle for business travel, so they're traveling maybe to a client site in their own private vehicle, a set amount can be reimbursed to that employee based on the prescribed civil service rates. The rate is based on the engine capacity of the vehicle and how many kilometres they're actually travelling. So with respect to electric vehicles will fall into the 1200 and 1500 cc category. On the next slide, we won't move on to it yet, but you'll just see the table and the bands, and I'll point out where the electric vehicle falls in a moment. With respect to mileage rates being paid, again, consideration is needed of that normal place of work. So the example I mentioned earlier, where you have somebody one week who has a working pattern that is Dublin one week, maybe in Cork another week, the travel between the two may not be able to be reimbursed because they effectively have two normal places of work. So consideration of the particular work pattern of the individual will be required to determine whether you can actually reimburse individuals between those two different locations if they're actually assigned to two different normal places of work. Consideration should be given as well to the lesser of rule. So this is where somebody is starting a business journey from home. You can reimburse them the lesser of either travel from home to that client site or temporary work location, or their normal place of work, their employer is based to that temporary work location. So it's the lesser of either of those two journeys. So you'll need to consider carefully where they're starting their journey. If they're starting it from home, is the travel between home and the temporary location more or less than travel between the normal place of work and the temporary location, and it's the lesser of those two that can be paid out to the individual. With respect to subsistence payments to individuals, again, there's a prescribed civil service rate, and you can reimburse employees for being away from the office for certain periods of time up to those prescribed limits. So the day allowance rate, that's where an individual is absent from their normal place of work between 5 and 10 hours or more than 10 hours. There's two different rates in each of those circumstances. It's a continuous absence, and the place that they're located must be more than 8 kilometres from their home or their normal place of work. An overnight allowance rate also applies. Again, there's a distance requirement, and that is greater than 100 kilometres from home or the normal place of work. The rate that the individual can be reimbursed for being away from their home or normal place of work for business purposes, there's a set rate, and it diminishes the longer the assignment is in place. So it starts with a normal rate of up to 14 nights and diminishes thereafter if it extends beyond the 14 nights. Just to note, there's different rates depending on whether that overnight takes place in Ireland or in an international context. So just to note the different rates that may apply depending on where that overnight takes place. Just to point out as well, just on the right-hand side there, there's a box just headed records. What we find in PAYE audits that revenue very much scrutinise the documentation to support payment of these business expenses. So they will expect some record, such as a claim form on file, that documents those items listed, i.e. when the journey happened, what the reason was for the journey, where did they start the travel, where did they end their travel. So very much documentation that quite clearly supports the fact that this was a business journey undertaken. And it will be, the onus will be placed on the employer to provide this documentation. If it's not provided, revenue may not allow it in a revenue audit situation. So it's important to review your policy around the claim form systems that you have in file to make sure that you have a robust system that tracks and records the reimbursement of these particular expenses. Next slide, Caroline. So I mentioned just a moment ago just the prescribed civil service rates, and that's just an extract there. On the left-hand side, we have motor travel reimbursement rates. So that's where somebody's using their own private vehicle. And on the right-hand side, we have subsistence rates, so overnight rates depending on where the individual has to stay in an overnight setting for business reasons. Those rates are outlined there, and the day rates. I just want to draw your attention to the motor travel reimbursement rates and the box on the left-hand side. So as I mentioned, if it's an electric vehicle, it's going to fall into that middle band, that 1200cc to 1500cc. It's also important to note the distance bands are a cumulative calculation. So at the beginning of a PAY year, somebody will start at 0, and as they move through the year and accumulate business travel, they'll move up to the band. So it's a cumulative rate. And once you decide what cumulative distance you've actually travelled, you'll then look to the right hand side. Depending on the CC engine of the car, you'll select the appropriate rate that needs to be applied for that distance travelled for that particular business journey. So just to note there, the cumulative bands on the left hand side. And next slide, Caroline. So to move on to site-based employees, so this is very much individuals in the construction sector primarily. So where we have somebody who has really no fixed base, they have no normal place of work being the employer's base, i.e. they don't travel to the head office every single day and conduct their duties there. Rather, they're employed to work on various different sites that the employer has contracted to provide services on. So, as I said, very much in the construction and building industry space. So within the construction industry, typically this is known as country money, and a payment up to €181.68 per week can be paid to individuals in this category without the application of PAYE. So the conditions attaching to the payment are as follows. The employee must be on site, and that site must be at least 32 kilometres from the employer's base. The individual must incur the expense of travelling to and from that site. So the employer shouldn't be reimbursing the individual for travel and subsistence costs, i.e. maybe train fares, and also paying the country money rate. It's only the country money rate that should be paid. It also doesn't apply to people who are jobbed on site, and effectively what that means is where the employer has hired somebody to work on one particular site, i.e. they've not hired them in a general capacity to work on multiple sites through their contract. They've just been jobbed on site to work on that one particular site, so it won't apply in that particular circumstance. So eating on site allowance is typically, again, also prevalent in the construction industry. So where somebody is on a site and there are no facilities available for them there to make tea, coffee or lunch, you can provide them with an allowance of up to €5 per day. So it's a flat allowance, €5 per day, no PAYE needs to be applied. The condition is that the employee is on site for at least an hour and a half before their lunch break and an hour and a half after their lunch break. So next slide, Caroline. So the final category within the 5 subcategories of travel and subsistence is emergency travel. So typically an employer cannot reimburse an employee where they're required to travel to their normal place of work. So that might be from their home to conduct duties in their employer's office. But that journey is not considered a business journey and cannot be reimbursed. However, where you've got a situation where there is emergency travel, i.e. somebody has been called to the normal place of work outside of their normal working hours for some sort of emergency, you can reimburse them the cost of travel from their location, whether it's home or somewhere else, to that normal place of work. Now, it doesn't cover situations where you may have a last-minute staff shortage, or if somebody perhaps is sick and hasn't arrived to work, that you need to find a replacement. It doesn't cover those situations. It's very much you need the individual because they have a particular skill set that is needed for that particular emergency and need to be on site. Or perhaps where you have individuals who are on call and are needed to attend a client site because an emergency, they can be paid out in those particular circumstances. So just to finish up on my side, Caroline, on the last slide, just some considerations and takeaways. So what we're finding we're talking to employers in preparation for this new reporting requirement is that the information that needs to be reported may be contained in different systems. And consideration needs to be given as to how you're going to collate this information so that it can be reported to revenue. So to take, for example, PPS numbers might be recorded in the payroll system. We may have an expense recording system separately that doesn't contain PPS numbers but may track reimbursements made to employees. Then we may have a HR system or a finance function that records perhaps payment of vouchers or benefits to employees. So there's 3 different systems there. How are we going to bring this all together and collate it such that we can report it to revenue? The thought process and thinking on who you need to bring in to start that system so that you're ready to go live come January will be needed now. So there's a little bit of preparation between now and the 1st of January. Also, there's some consideration around the interface with revenue systems. So Sinead will explain how the information is going to be uploaded to revenue. So clients will now need to consider, okay, is my payroll function maybe going to support me on uploading this information to revenue, or will I need to perhaps bring in our IT department to, 1, pull the information together, and 2, upload it to revenue. There are certain prescribed files that can only be uploaded to revenue for this new reporting requirement. So some consideration would be needed from an IT capacity on that as well. Also, the frequency of the reimbursement of expenses. So again, talking to clients, some clients reimburse expenses on demand. Some clients reimburse them at set periods during a month. And because the reporting requirement as we stand at the moment is an on or before reporting requirement, you could find yourself whereby you reimbursed on demand that you could be making daily or weekly filing requirements for this new reporting requirement. So it's probably important to consider how and when we should actually reimburse employees for expenses incurred, such to consider the administrative burden that this new reporting requirement may impose if you report, for example, or if you reimburse on demand. We're also talking to clients just around PAYE settlement agreements. So PAYE settlement agreements are an agreement that between the employer and revenue, whereby the employer covers the taxes arising on benefits provided to employees. So those benefits need to be minor or irregular in nature. So what we might find settled through a PAYE settlement agreement could be things like small vouchers maybe during the year, perhaps to acknowledge a birth of a child or a wedding, or perhaps exceptional performance by the employee. Perhaps there could be flowers throughout the year. We've seen other things like maybe, summer barbecue kits or hampers. Those kind of items can be covered in a PAYE settlement agreement so that the employer calculates the tax arising on those benefits and remits them to revenue. The benefit of conducting and implementing a PAYE settlement agreement really are twofold. One is that you're maintaining your PAYE compliance obligation as an employer, and 2, it distances those other small benefits from the bigger benefit of the small benefit exemption. So what you don't want to happen is that there's a misunderstanding between what's in the small benefit category, i.e. availing of that €1,000 exemption limit, and what are other small benefits. So you want to separate the two so that in the event of a PAYE audit, revenue are not coming along saying, well, you actually gave a bunch of flowers in January and that technically could be a small benefit. but you also gave some other small voucher perhaps in April, and both of those are your first two qualifying incentives for the small benefit exemption. So you've effectively used up your small benefit exemption of €1,000. And if you do make a voucher payment later in the year, that's maybe €1,000 voucher, it may not qualify for the small benefit exemption. So by utilising a PAYE settlement agreement, you're sweeping up those smaller benefits and disassociating them from the small benefit exemption €1,000 limit, and thereby making that still available to you to give to your employees, and sweeping all the other small benefits into the PAYE settlement agreement. Final matter that I'll just finish up on here is just to consider any expense policies, your remote working policy, and internal control and procedures. So in advance of going live in January, consider what your expense policy currently looks like, and does it align to revenue guidance and tax legislation? So i.e., are you making payments that align to what revenue require you to make to avail of the tax exemption? So there might be a little bit of review of your expense policy required. I'd also encourage employers to consider their internal control procedures. More often than not, the expenses might be approved by a line manager who may not be aligned to finance or payroll functions, so they may not be privy to what they should or should not be approving. So it's important to maybe just consider those control procedures to make sure nothing's slipping through the net that shouldn't technically be approved and doesn't align to revenue guidance or legislation. So I'm going to pass back to Sinead. Hopefully we're good to go.
Thanks, Michelle. Hopefully everybody can hear me. So look, I'm going to go through largely the systems, and in particular the systems that Revenue will be implementing themselves for the integration into directly into the own revenue systems. Obviously, we're working quite closely with the likes of the software developers and providers on that side in terms of developing an API. And I don't propose to go through that mechanism this morning. Obviously, I'll speak to it, but I'll largely be focusing on the file upload mechanism as well as the manual screens that will be available, which is similar to what we have available for real-time payroll reporting as well. So I know Michelle covered quite a lot, and I was always going to touch on it at a much higher level. So I propose to continue to do that, but my presentation might be a little bit quicker, just as Michelle has covered quite a number of the I think the salient points on it. So just to kick off with the first slide there, in terms of, as I'm sure you all know, this was introduced in last year's Finance Act and legislated for. And that it will, in essence, require employers to report to Revenue details of the expenses and benefits provided to employees and or their directors. And as Michelle has already covered, it will be the requirement to make a report to Revenue where a payment is being made to an employee director under 3 specific categories. So that's travel and subsistence, the small benefits voucher, and the remote working daily allowance. Now, this is subject to a commencement order, and obviously my colleagues in RLS are working on regulations, but it is intended that this will be introduced from 1 January 2024. So I know it mentions there in the presentation that it's on a phased basis. I think the view is that these 3 items would be the first phase of that, but as of now, they're the only items that we are working on. So you know that that's the only thing that's being introduced as of now and as of 2024. But we're on track for that to be released for 1 January 2024. So just the next slide there, I think, Caroline. So just to go speak very briefly about our thinking in terms of the development. So we're going to build on the principles that are already there for real-time reporting and that we rolled out with the payroll reporting and PAYE modernisation. And, you know, we'd look at it as that you'd be reporting these as part of an existing business process. So the process would always have been there, that you would be keeping these records, and Revenue would always have the ability to request those records when they wanted them. Obviously, that would be probably part of compliance. whereas now that could be in real time. So a few of the reasons that this reporting requirement in real time is being developed is, one, obviously, and really importantly, is that compliance piece, and move the focus away from the less risky taxpayers and employers in the industry. And it allows us to take a real-time look at businesses and focus our resources and your own resources on those where risk is actually identified. There will also be obviously information that will be shared with our colleagues in terms of more high level kind of policy decision making, and providing meaningful data to support policies that our colleagues in the Department of Finance may be introducing. One of the things that we're also introducing with this is there will be an ability for the employees themselves to see what has been reported in terms of a non-taxable benefit or payment to them. So I'll show you that briefly at the end of the presentation, but there will be screens available in an employee's My Account, similar to what is there now under the likes of the employment details summary for employees for their payroll. So just next slide, please. So as I've mentioned, we're going to leverage the existing design principles that we have with the PAYE modernisation. So our intention is always that we'll keep it as similar to the processes that we already have there, and a familiarity in terms of the screens and the layout and the steps that you would have to go through in providing this information to us in revenue. So we're very much working on what is already there for PAYE. So the hope would be that it wouldn't be a brand new look or feel or process to go about. Now, just to reiterate, while we're keeping it similar to payroll, we aren't linking it to payroll. So what I mean there is that there's no requirement that you need to do this process in conjunction with your payroll. It is a separate reporting requirement. There is separate screens and there is separate entry points to input this data. So as I mentioned, we are going to provide revenue, or will provide facility in ROS. So you'll be able to submit, amend and correct enhanced reporting requirement data, and you'll be able to also check that information at the submission level. As I've mentioned, we will also be providing facilities through the third-party software providers to integrate with our own systems. And obviously those conversations have been ongoing throughout the year, and there's a lot of payroll providers, but also expense providers and other software type providers engaged in that process, and they're actively involved in testing on a daily basis. And we have fortnightly meetings as part of our service user group with those software providers in terms of developing that API to allow that integration between the revenue systems and their own software that they're providing. And I would encourage you to reach out to your own software providers if you have them, and speak to them to see what they are providing. It's really, I suppose, it's a business decision on their end how they facilitate that. So some will be through expense packages, some may be linked to payroll, but it'll be able to separate out when it comes through to us. And there might be other mechanisms that they're utilising that I suppose we wouldn't be aware of, but I'd encourage you to speak to your software provider, or if there's software providers that maybe you feel aren't engaged, we'd be happy if you share those details with us, and we will reach out directly to them as well. But all the information in terms of the software side of things is on our revenue website. So software providers who may not be able to attend fortnightly meetings can go in and access the test environment and the PIT environment themselves through the revenue website, and all the information is up there for them to be able to do that. So as I mentioned, there will also be functionality available for employees to view the details in their My Account, and there will also be a high-level report available to employers via ROS that will give the totals of the categories submitted on a monthly basis. So next slide, please. So this is just touching on, and I know Michelle already mentioned this, the categories and the level of detail we will be looking to be submitted. So under travel and subsistence, we've actually broken out travel and subsistence separately. So there will be travel vouched, travel unvouched, and then separately there'll be subsistence vouch and subsistence unvouched. And then the three other categories that Michelle already mentioned and talked through in detail is the site-based employees, which includes the country money, the emergency travel, and the eating on site. So you will, if it's a travel and subsistence payment, if it's travel vouched, you will simply select that subcategory and you'll enter in the date of the payment and the amount of the payment for the individual. And that's all we're asking you to report on under that. In terms of the small benefits, and I know we said vouchers there, obviously small benefit isn't only vouchers, but it is something that is quite commonly used. So that's what we say vouchers, but just to reiterate, it isn't only vouchers that we see as small benefits. There are other things that can be small benefits. And all we will look for there is, again, the amount paid and the date on which it is paid. And, you know, the criteria around any of this, which Michelle has gone through in detail, isn't changing. It's just that we will ask that certain parts of that is now reported to us. So the rules and the legislation around any of it isn't going to change in terms of what meets the criteria, let's say for travel vouched or travel unvouched. And then for the remote working daily allowance, we'll simply look for the number of days and the amount paid and the date on which it was paid. And then just as you're aware, the small benefit, there is a maximum amount of €1,000. And similarly, obviously, there's a 320 limit on the remote working daily allowance. So our system will flag warnings if there's amounts entered in that would be above that. For example, if an amount of 50,000 was entered for remote working daily allowance, it would flag a warning. It will still accept the information, but it will throw up a warning to whoever is entering it. So just next slide, please. So again, I believe Michelle touched on some of this in terms of what is and isn't included in this. So only expenses incurred by the employee will be reported under this. So as Michelle mentioned, the use of company credit cards or prepaid cards are not within the scope of the ERR. So it's if a payment is reimbursed to an employee by an employer, and I suppose in particular reference there to travel and sub, and probably the remote working daily allowances. It's the reimbursement of an expense incurred. Again, no reporting will be required outside of the definition of an employee or director. So again, as Michelle mentioned, volunteers are not within the scope of this. So it's just someone who would be an employee or director of your company is within scope. Any payments made to them that would fall under one of the three categories. Then the likes of fuel cards, toll tags, car insurance, motor tax, if that is paid for by the employer, it won't be within the scope of ERR. So just next slide, please. So as already touched on, country money is included, and that is under the travel and subsistence subcategory of site-based employees. And obviously the TTM exists there in terms of what would be classed as country money. And as I said, I went through the data items that we would be looking for in terms of being reporting. So the likes of CCs on cars or kilometres travelled, we're not going to be looking for that type of information. I understand you may be recording it, or obviously it's something that you'd need to know for the various categories, but we're not going to be asking for that to be reported to us. And then, as I've mentioned, any payment made which exceeds the threshold. So, for example, the remote working daily allowance at $320 a day, you know, the normal rules for taxable payments applies there. So just the next slide, please. So this is just to highlight some of the engagement we've done to date. And this was, I suppose, the kickoff with the service user group and the software providers. And that kicked off in March. In terms of the meetings, we did have discussions in advance of that with them. And as I've already mentioned, we're encouraging any software providers to engage, and we have quite high engagement on it already. And as I said, we're well into the testing phase of this, and in a similar timeline to what was there for payroll. We'd look to have it available, obviously, in advance of 1 January. But, you know, testing on our side and obviously on the software provider's side is well advanced at this stage. But as well, it's not too late for software providers to engage with us. And if you know of anyone who wishes to attend, we can be contacted at that email address, pims@revenue.ie, and the invite for the fortnightly meetings can be forwarded on. So next slide, please. So again, as I've already mentioned, we're having ongoing engagement. Some of you may have already attended some of the webinars that we have kicked off. And they're going to be running right up until November. And on top of that, obviously, we have individual stakeholder engagement similar to this. And the invite, if someone hasn't been able to attend one of our webinars to date, we will be putting that registration for the invite on our website in the coming days. And it'll be possible to just go in through there, and it's through Eventbrite, and there's a wide number of dates that'll be available between now and right up until the middle of November in terms of engagement or attending one of those webinars. We'll also have the video of the presentation, which is in essence this presentation that we're giving to you here today, on our website. And similarly, once we have available to us the screens, we will be putting videos of a live demo on our website as well, so that you yourselves can go back in and walk through them in your own time. I appreciate doing the process is much more beneficial than just looking at screens of someone doing it. So once we have that system available for us, we will be making videos, and they'll be made available on our website as well. So I'm just going to walk through the screens that we have developed to date with you, just to give you a sense of how this process will work in terms of the direct integration with yourselves to the revenue ROS screens, not touching on something that's going through the software providers themselves and the API. So just if we can move on to the next screen, please. So similar to what's there for payroll, we will have, I suppose, various options on the ROS landing page in terms of the pieces that you can go through. So what we're looking at there is the bottom line, which says employer reporting notifications, the enhanced reporting requirements, and then that's the submit expenses or view expenses benefit, and then the report, the monthly report that I mentioned as well. So the first screen I'm going to go through is the employer reporting notifications. And this is, sorry, if you could just move on to the next screen. And this is basically just going through where, as I think Michelle already mentioned, that, you know, the PBS number or the full details may not be housed in the location that you're pulling this information from. So what this enables is, if you don't have that employer ID, what you'll enter in here is the employee's PPS number and their name, and you know, that can be a file, it'll be a file upload, which I'll walk through now. So there can obviously be multiple employees on the one file. So if you don't have that information to hand, you go into the request employer notification by file upload, and just next screen, please. And that will bring you into this screen where you choose your file that you want to upload, where you have all that detail in terms of the employee name and the PPS number. And you browse it wherever that is saved down on your computer. And then you just, obviously similar to the existing processes that are there with ROS, you have your digital cert and your password. And then just the next screen, please. And what that will do, it will immediately send you back a file with the employment ID for those employees that you've entered in. So if you already have that information, you don't necessarily have to do this step. It might be good practice to do this step just from a government's perspective to ensure that you have the right PPSNs. You know, we have instances where people have incorrect PPSNs attached to people. And, you know, it might just be an opportunity to ensure that all that information is correct. You know, it's for whatever reason, a PPSN might have gone in incorrectly at the beginning. But this just ensures, it's a mechanism to ensure you have the right employee with the right records getting the right payments. And that will be sent back to you immediately. So then what that enables you to do then is submit your ERR report for the various expenses that you want to submit at that time. So if we just move on to the next screen, please. So here we're just going to touch on the two mechanisms, I suppose, that are the revenue direct mechanisms outside of those that are being provided by software providers. So they are the file upload and then the online form, which is the manual screens. So if we just move on to the next screen, please. So here you'll see it's the second tab on the row under ERR, so submit expenses benefit. So you either have your ERN or you've already requested them, then you can submit the expense and benefit, and then you have the two mechanisms which you can choose from. The first one I'm going to go through is the file upload. So if we just move on to the next screen. So you just select that item and it's upload expenses benefit, and you'll see underneath it that you have the complete online form option. So in this instance, we're going to upload the file. So submit expense benefit by file upload, you select that button. And if we just move on to the next screen, and you will have your file on your computer or within your system. Now, the formats that we can accept are JSON or XML, and this again is similar to what's accepted in payroll. So Excel files can be converted to XML. So it is possible to use an Excel file. It just has to be converted into XML before it's uploaded to our system. And the reason being is all to do with the file structure and how it comes into us. And Excel, it's if for example there's an error in the file, the way it would come in if it was an Excel file, it's next to impossible to find that error, and it's very cumbersome, and our system just wouldn't be able to automatically accept it. So we will accept the JSON or the XML file, and again, similar to the existing processes, you upload that file and you sign it and you have your password and you sign it, submit, and the records will be updated automatically. And you need one file for everything. You don't need individual files for employees or for the individual items, but it just has to be in a particular, I suppose, file format for us to be able to accept it. If there is an error within the file that comes in, we will accept the file, but we will highlight the error back to you. We will send it back with the error, and you can correct that error and resubmit it. If there is an error in, say, the file structure, we won't accept it. So obviously, as I said, if it's not in the XML format, we won't be able to accept it. But if there's an error in terms of maybe the format of the PPSN is incorrect or something, we'll accept everything that's correct, and we'll send you back and inform you that there is an error there, so that you'll be able to correct the piece that is incorrect. So just next slide, please. Then once that is submitted, you'll get an acknowledgement that it has come in. Now, one of the questions that we've gotten before, you don't need this acknowledgement before you, I suppose, make the payment or anything to the likes of the employees. This is simply just an acknowledgement that the reporting has come through and we've received it in revenue. You can download that acknowledgement if you wish, and then you can also view the expenses submission that you've already submitted, or you can view the run that will give you the full details of that particular submission. So then just next slide, please. So that's the file upload mechanism, and I'm just going to run through the online form now for you. So again, you go back to the original screen, and instead of selecting the upload by file upload, you'll submit by online form. You'll select the tax year that you're submitting it for. And then if we move on to the next screen. So what we have here, if you've already made submissions with your employees, those employees that you've already made a submission for will be listed here. So they will all come up with the details that you've already listed, and you can select the ones that you now are making another payment to. So for the likes of Travel Vouched, you can select John if he's already in the list. But if there's an employee that isn't on that list, you can add that employee. So just the next screen, please. So it's depending on the information that you have is the level of information that we'll ask you for. So if you have the PPSN of that individual employee, and the employment ID, all we will ask you for there are to fill in is the employee details and the personal details. You ignore the address details column. However, if you don't have the PPSN or the employment ID, you will have to give us all the details. And until you get the PPSN or the employment ID, you will have to give us all those details. And the reason is that we match the record that is submitted to the employee, and our mechanism to do that is through the PPSN and the employment ID. And we do need the PPSN, as the employment ID isn't a unique number in a lot of instances. It can be the same number across multiple employees. So it's not robust enough in terms of our systems being able to do a matching exercise. So you simply enter in those details, and this is in the manual process. And the next slide, please. And then you can select the category that you're paying for. So here, in the example given, we've travel and subsistence, and travel and subsistence is the only category that has a subcategory. So then you select, as I already mentioned, one of the subcategories that we've already gone through. You will enter in the amount that is being paid and the date of that payment. And then you will save that down, and then we can just move on to the next slide. And again, you can add multiple expenses for employees, and you can add multiple employees at any one time. So you'll see here on this slide, it's asking you, yes, you can add another expense, or else you will continue on if you're finished with that employee. So if we just move on to the next screen. So it will then give you details of all the items that you have manually entered for that individual employee, and you can amend those, you can delete those, or you can confirm, or you can add additional ones, or you can confirm that the details are correct. And if you're happy that the details are correct, you can simply submit the expenses and the benefit. We just move on to the next slide, please. So again, similar to the existing processes, you'll enter your password, and you'll sign it, submit. And again, you'll get an acknowledgement that that has been submitted. And you can, again, view that expenses benefits that you've just submitted, or you can print the screen that'll just have the acknowledgement. This is simply an acknowledgement to say that, yes, we have it has come and been received by revenue. So if we just move on to the next slide. So just to say that if you, for whatever reason, are in the middle of doing the manual upload and you have to step away for whatever reason, take a phone call, or someone pops into the office, when you go back in, that should still be there, and you can either choose to continue on with what you have already started, or you can start again from the beginning. So you will get the option. It won't be, if there is a reason that you've had to step away, that will still be there for you to go back to at a later time, and you can continue on from the point that you stopped at. Just the next slide, please. And again, this is just showing you what is available there that you've already uploaded, and now you're being given the opportunity to submit. So it's just showing you that at that point when you go in afterwards, that it'll still be there. If we just move on to the next slide. And as I already mentioned, if we just move on to the next slide, please, if that's okay. Thank you. Just mentioning here that the warning messages that pop up, as I said, we'll still accept the information, but it will just give you a warning message. So for example, here under the small benefit, there's an amount of 2,000 entered in, with the small benefit not having a maximum limit of €1,000 for the individual. And the next slide again. And that's just similar. It's showing a warning message for the remote working daily allowance. So I'm just going to run through the display of the expenses and benefits that will come up for the employers themselves. So just you'll be able to see what you've already submitted. So if we just move on to the next slide over, please, and we can go again. Thank you. So there's a number of mechanisms in which you'll be able to view what you've submitted. So you can do it by the tax year, the submissions by the month, the reference number, the submission ID, or the recently updated ones. So they'll all in effect give you the same information. So it's just to show you that you will have those options to see what you have already submitted in terms of the expenses and benefits. And if we just go to the next slide, please. So this is just an example. I'm not going to go through all of them. This is the submission by recently updated runs, and it'll show you the run reference, that it's been processed, when the date and happened, and the number of expenses that were included on that submission. And you'll be able to view that in detail then as well. And then I'm going to touch on now that there will be a monthly report available as well. So if we just move on to the next slide. And again, the next one. So this, again, as I mentioned at the outset, the third option on that landing page, it will be the option to view that monthly report. So if you select on that option, and if we just go to the next slide, and you can select the tax year and the month that you want to look at, and it will generate the report for you. So if we just go to the next slide, and it'll give you an indication of what that report will contain. So you will see here, you will be able to see the registration number, your tax year, the month it's in reference to. You will be able to print this. We won't save it down, but you will be able to go in and select any month or any year and print it as you need, or just simply view it on screen if you prefer. And it'll show the number of entries for that particular month. And it'll give you kind of an overview of what has been submitted in any given month there. And then I'll just briefly touch on the screens that an employee will be able to see. So if we just go on to the next slide. And as I mentioned, it will be in their My Account, similar to what's there in terms of the EDS already. There'll be an option for expenses and benefits, so the employee can simply go in, select that option, and if we move to the next screen, they'll be able to view on the particular year that they want to see the expense or benefit for. And if we touch on the next screens, and they can select the employment ID. They could have multiple employments, so there will be a separate records there for each employment, and they select the employment that is relevant to them that they want to view, and they simply select view. We move on to the next screen, and that will give them, and we can move on again. And that will just give them details of what has been submitted for them at that point in time for that employer, in terms of the travel and subsistence, the small benefit exemption that they've already, or benefit that they've already gotten, or possibly remote working daily allowance. So then, just to reiterate, we do have a dedicated web page for ERR that we will be updating, and obviously that's where we will have the link to the registration for any of the webinars. I know that the invites are going out to Ross inboxes directly, but if for whatever reason you weren't able to attend one of the events that you got the invite for, the link will be going up on our website. It's hoped that we'll have it up there this week, and similarly we'll hope to have the presentation up there, and then when we have them available, we will have live demos of a walk through the screens up there as well. And obviously there's a link there as well for any software providers who want to go in and look at the information that's there in terms of the development, or if they want to attend the meetings themselves, they can contact us at pims@revenue.ie and just give us details of their company and who will be in attendance, and we can send them the invite directly to that. So yeah, thank you very much for your time, and that's everything from me on that.
Sinead, thanks very much for that. I'm conscious of time, but there's a lot of questions coming in. So what I'm going to try and do is wrap some of the questions up as one question with a few different, maybe one for each of the panel. Vadi, I'm going to turn to you first, really on the technology piece. From the point of view of systems and employers, and it's all well and good saying payroll softwares are doing this, but an awful lot of expenses are not run through the payroll software. A lot of companies run a lot of this on Excel. Sinead said we can convert it. Is it as simple as that? And is there a solution?
Thank you, Jillian, and thank you, Sinead, for describing that earlier. So regarding the reporting, we have the Excel, and what is acceptable is either XML or JSON. Unfortunately, it's not as simple as having the Excel and saying file save as XML, because for every type of files, let's say the XML, there is something called the schema, and the schema identifies all the data elements. So, for example, the name, the PPS, the address, stuff like that. It says which fields are mandatory or not, and what type of field it should be. For example, when we're talking about the type of expense, we can't just type in travel. It has to be exactly in the format as set by the schema. For the PPS number, for example, it can only be 7 or 8 characters, 8 or 9, for example. So the idea is it's not as simple as that. It's we have the Excel, and then we have an engine that generates the XML. On the plus side, we've been working on that specific thing in the background, and we are part of the SUG, so the Service User Group, to make sure that we're testing it to ensure that come January 1st, we can submit on revenue, just like that. So just to reiterate on Jillian's point, even if you don't have the system and you have these expenses tallied either by Excel, or it could be in a CSV file or in a text, we could, from our end, generate the XML and submit as an agent for an employer.
Thanks, Paddy. Sinead, there's a number of questions in different guises. My favourite one is, we've bought Easter eggs for our staff before we gave them any vouchers. Does that count as the small benefit number one?
Yeah, and look, like, I think there's a lot of nuance around the small benefit that I think maybe hasn't been thought of to date. And I suppose it's like, how is it being recorded now would be my first question, because ultimately the criteria of what constitutes a small benefit exists, and we're not changing or moving from that. So obviously when it was one small benefit, it was very easy. There was one and that was it. Now there's two, and there is, guidance out there that says it must be the first two. So, it is around when that is being purchased. Well, what is the process of identifying the employees that are getting it? What have they already received? Some employee may have already received a voucher to €1,000. They might have got that in January. So then, is anything beyond that? I think Michelle touched on the small and irregular payments. And does it fall under that? Or the Easter egg may be the first item that an employee has received that year, and are we going to be so prescriptive to say that the €5 Easter egg is the first small benefit? So look, I think that is something that we are looking at. Obviously the guidance is there, and we are very we're not moving away from the guidance, but all of these things have kind of come up as a result of this, even though these are things that are all happening already, and the rules around it haven't changed. It just seems to be, I think, like as Michelle touched on, people have started to think about, okay, well, what am I doing now? And, what does that mean for those practices now? So that is something that we are looking at in terms of, fleshing out our guidance around that. Like, I don't think there's a one size fits all answer on that. But in terms of the small benefit, I think it really needs to be, it's something that should be known, largely in, when it's being paid, whether it's taxable or not for that individual. By and large, I accept that there's exceptions. By and large, when somebody is giving someone a voucher, that is a substantial amount of money, potentially at the end of the year, at the beginning of the year. there should be an awareness when that is being purchased that, okay, that is going to X employee hasn't received anything this year already, so that's fine. It can fall under the small benefit. Oh, actually, X employee has actually received 2 vouchers to the €1,000 this year. So that then becomes taxable. So, you know, we have these processes. So we've seen them across the civil service where there's smaller amounts potentially paid, and there's a process in place before that ultimately lands with the employee as to how it should be recorded. So it is about that governance piece around how they should be recorded. But in terms of those Easter eggs, flowers, and the various things that have cropped up, look, it is something that we have been asked and that we are looking at, and that we'd hope to flesh out in terms of examples and guidance. But ultimately, it is about that that governance piece at the moment, and the small benefit. The criteria is there already. The guidance is there. We won't be moving away from the guidance in terms of the reporting. You know, so just to be conscious of that and have a look at that in terms of, okay, well, how are we already doing it?
Thanks, Sinead. I think the Easter eggs are caught so at the way it's starting to sound there. So sorry to say, but revenue might be about to kill the Easter bunny. Edel, can I ask you, from your experience in working on a lot of our clients for payroll, do they already use the payroll for reporting or for keeping track on the expenses for employees?
Generally speaking, no. We have a very small number of employers that would pay expenses through the through the payroll, and largely what we see is that it's generally non-Irish companies that would do it. So a lot of our US companies would run their expenses through the payroll. We would have some Irish companies, but generally speaking, it would be the non-Irish clients that would. But it's a very small number.
Thanks, Edel. Michelle, do you think we're going to see a lot more people doing PAYE settlement agreements because it's just in more focus? It's more conscious now. The buying of an Easter egg before, it might have just been, well, it's only buying an Easter egg. But now it's, well, actually, we've had to make a report. So people are more aware and conscious of what they are providing for staff.
Yeah, I think so, Gillian. And I think PAYE settlement agreements probably weren't in the spotlight as much. I think this new reporting requirement now is going to bring them more into the spotlight. And what you definitely don't want is a situation where you're going through a PAYE audit, and in January and February you've given flowers and some small little gifts, and a revenue official decides that those items are your small benefit, and the €1,000 you gave at Christmas is going to have to be taxed, and it doesn't come in with the small benefit exemption regime. So I think it's absolutely worthwhile for every company to sit back and consider those small irregular benefits and consider whether they should just sweep them up in a PAYE settled agreement before the end of a PAYE year.
Great, thanks. I am very conscious of time. There is still a lot of questions. The slides will be made available. There will be a link sent out to them. We'll also make a link available for the recording. Again, apologies for some of the sound quality. What we'll also do is we'll have a look at some of the questions that have come in. We'll see if we can corral them into maybe an FAQ that we'll put a link up on our site too, that hopefully will deal with a lot of those queries. But I'm sure everybody has to get back to their day job here today, and I know our marketing team is probably looking at me and going, stop running over so much. Nobody ever keeps to the time. I'd like to thank everybody for joining us this morning. Again, apologies for the slight delay at the start, and I'd also like to thank our panellists, in particular Sinead, who's made herself available to us today from Revenue, as I've no doubt they're very busy in Revenue at the moment getting ready for this new requirement. The reporting starts on the 1st of January 2024, and it is for payments made on or before the 1st of January 24. So anything paid in Christmas, my understanding, Sinead, is it's not going to be reportable, but it's for payments made on or before the 1st of January. Sorry, from the 1st of January, and you file on or before. So yeah, it's not a set filing date like payroll on the 23rd of the following month. You have to file before you've made it or as you're making it.
Yes, that's it.
Great. Thank you very much, everybody.